The U.S. economy under President Trump was a tale of two realities, each unfolding side by side yet often feeling worlds apart. As the country moved through these years, Americans found themselves caught between optimism and uncertainty, with the economic landscape shifting beneath their feet. For some, it was a time of booming growth, job creation, and prosperity. Proof, they said, that the administration's policies worked. In cities and towns across the nation, new businesses opened their doors, and existing companies expanded, hiring more workers and investing in new projects. The stock market soared to record highs, and unemployment rates dropped to levels not seen in decades. For these Americans, the economy felt vibrant and full of promise, a validation of the belief that lower taxes and fewer regulations could unleash the country's entrepreneurial spirit. Supporters credited tax cuts and deregulation for fueling business expansion and wealth. They pointed to rising 401k balances, bustling shopping centers, and a renewed sense of confidence among investors and business owners alike. For them, the numbers told a clear story. The economy was on the right track, and the future looked bright. But at the same time, others saw warning signs of instability and looming crisis. Beneath the surface, they argued, not everyone was sharing in the prosperity. Some communities struggled with stagnant wages, rising costs, and the threat of layoffs. The benefits of growth, critics said, were unevenly distributed, leaving many Americans feeling left behind. Critics worried that aggressive trade policies and tariffs could disrupt global supply chains and trigger a recession. They watched nervously as trade tensions escalated, fearing that new barriers would hurt American farmers, manufacturers, and consumers alike. Headlines warned of uncertainty, and some businesses hesitated to invest, unsure of what the future would bring. This split wasn't just among economists, it played out in political debates and media coverage. Newsrooms buzzed with competing narratives, and politicians sparred over the true state of the economy. Every new data point became ammunition in a larger battle over credit and blame. Every jobs report or stock market surge was celebrated by one side and dismissed as temporary by the other. Supporters cheered each positive headline, while skeptics cautioned that the good times might not last, warning of bubbles and hidden risks. The core question: were these gains sustainable or just masking deeper problems? Economists debated whether the growth was built on solid ground or if it was a temporary boost fueled by short-term policies. Many wondered if the prosperity would reach everyone, or if it was simply papering over long-standing issues like inequality and debt. Americans found themselves living in two economic worlds, one of triumph, one of anxiety. For every family celebrating a new home or a promotion, another faced foreclosure or mounting bills. The gap between thriving neighborhoods and those struggling to get by became more visible, highlighting the uneven impact of economic change. This fundamental divide shaped the entire conversation about the nation's financial health. In cafes, workplaces, and around dinner tables, people debated what the numbers really meant, and whether the good news was truly reaching everyone. Good news was proof for some, a mirage for others. The same statistics that inspired hope in one group fueled skepticism in another, deepening the sense of division. The result? No shared understanding of where the economy was truly heading. With so many conflicting signals, Americans struggled to agree on what the future might hold, or even how to measure success. The nation was left to choose which story to believe, each person weighing the evidence and deciding for themselves which side of the economic coin felt most real in their own lives. Supporters of the Trump economy point to a wave of strong data that, for them, tells a story of undeniable progress. They highlight a period marked by optimism and growth, where key economic indicators seemed to defy expectations. GDP growth hit impressive highs, even reaching 3% in a quarter, defying critics' predictions and surpassing the growth rates seen in previous years. This surge in economic output was seen as a sign that the administration's policies were working, fueling a sense of momentum across industries. The stock market soared to unprecedented heights, with the Dow and S&P 500 hitting record levels. This rally not only boosted retirement accounts and investor confidence, but also sent a message of stability and prosperity to households across the country. The administration's strategy centered on sweeping tax cuts and aggressive deregulation, aiming to create a more business-friendly environment and encourage entrepreneurship. The 2017 Tax Cuts and Jobs Act slashed corporate taxes, aiming to spur investment and hiring. By lowering the tax burden on businesses, the hope was to free up capital for expansion, innovation, and job creation. Rolling back regulations was touted as unleashing American business, removing barriers that had long been seen as obstacles to growth and productivity. These moves, supporters argued, created a vibrant, expanding economy. They pointed to a surge in business optimism, new hiring, and a renewed sense of possibility in both established industries and emerging sectors. For many Americans, this wasn't just about numbers on a page. It meant more jobs, bigger paychecks, and a greater sense of financial security for families across the nation. The narrative was clear. Prosperity was the direct result of a focused, pro-growth plan that prioritized American businesses and workers. Job opportunities increased, and consumer confidence soared to new heights. People felt more comfortable spending, investing, and planning for the future. Supporters insisted this was no accident, but the intended outcome of deliberate policy choices designed to put America first and drive growth. The Trump years, they said, marked a new era of American economic strength, with the country reclaiming its position as a global economic powerhouse. For millions, the boom felt real, transforming lives, opening doors, and fueling hope for a brighter tomorrow. The Trump era's job market was a headline success. Unemployment fell to a 50-year low, just 3.5%. Gains were broad, record-low jobless rates for African Americans, Hispanic Americans, and Asian Americans. Wages, long stagnant, finally began to rise, especially for lower-income workers. Families saw more money in their pockets, fueling consumer confidence. The message, more jobs, higher pay, and opportunity for all. This resonated with voters who'd felt left behind. A tight labor market gave workers leverage to demand better pay and benefits. For many, the talk of recession felt disconnected from their reality. The strong labor market became the cornerstone of the Trump economic argument. For those thriving, warnings of a crash seemed out of touch. The jobs boom was the story they believed. Yet, beneath the surface, anxiety grew among economists and business leaders. Major firms like J.P. Morgan and Moody's raised recession odds, citing mounting risks. Trade policy unpredictability, especially tariffs, created chaos for global businesses. Uncertainty led companies to delay investments and hiring. Even Trump sometimes acknowledged the risk of downturn, blaming the Federal Reserve. Corporate debt levels soared, making firms vulnerable if growth stalled. Critics argued the boom was fueled by temporary tax cuts, not lasting fundamentals. The economy, they warned, was running on borrowed time. The fear, a single misstep could trigger a serious fall. This counter-narrative suggested danger lurked just beneath the surface. The debate over stability versus risk intensified. The stock market's record highs were matched by wild swings and sharp drops, creating an atmosphere of uncertainty that rippled through the financial world. Investors watched nervously as gains evaporated in minutes, and the mood on Wall Street shifted from celebration to caution almost overnight. Tariff announcements and escalating trade tensions triggered fresh waves of volatility, rattling investors and sending shockwaves through global markets. Each new headline brought a fresh round of anxiety as traders tried to anticipate the next move in an increasingly unpredictable environment. Uncertainty made businesses cautious. Many delayed expansion and hiring, choosing instead to wait for clearer signals before making big decisions. Boardrooms across the country echoed with concern as leaders weighed the risks of moving forward in such a turbulent climate. Companies relying on imports faced higher costs, squeezing profits and forcing some to reconsider their supply chains. The impact was felt from factory floors to executive suites as rising expenses threatened to erode hard-won gains. The tech sector, once a powerful engine of growth, felt the strain as supply chains were disrupted and production slowed. Innovation was no longer enough to shield companies from the mounting pressures of a global trade war. Some analysts warned of a tech bubble, suggesting that soaring valuations could quickly deflate if a recession hit. The possibility of a sharp correction loomed large, adding to the sense of unease. Optimism faded. Anxiety grew in boardrooms as leaders grappled with the new reality. The confidence that once fueled bold plans was replaced by a cautious wait-and-see approach. CEOs began warning publicly that tariffs were hurting business, voicing concerns in interviews and press conferences. Their messages were clear. The uncertainty was making it harder to plan for the future. The initial benefits of tax cuts and deregulation, which had once fueled optimism and growth, were now overshadowed by the instability brought on by the trade war. The promise of a sustained boom seemed to be slipping away. Corporate caution signaled cracks in the economic boom's foundation. The signs were subtle at first, but soon became impossible to ignore as more companies pulled back on spending and investment. Investment slowed, a classic sign of trouble ahead. Projects were put on hold, and the flow of capital that had once driven expansion began to dry up. The mood shifted from confidence to concern, as uncertainty became the new normal. Conversations in offices and boardrooms turned to risk management and contingency planning. The market's tremors were a warning, a signal that the era of easy gains might be ending and that a period of greater caution and vigilance had begun. Tariffs were the centerpiece of Trump's economic gamble. The goal: protect American industries and revive manufacturing. Supporters saw this as leveling the global playing field. But critics called tariffs a blunt tool that raised costs for U.S. companies and consumers. Retaliation from trading partners hurt American exporters, especially farmers and manufacturers. The trade war created winners and losers at home. Economists warned that escalating conflict could tip the U.S. and global economy into recession. The Federal Reserve watched with concern, citing trade uncertainty as a major risk. The balancing act was precarious. A single misstep could have devastating consequences. The stakes couldn't have been higher. The Trump economy is often compared to Biden's, fueling political debate. Trump supporters tout strong growth and low inflation as the gold standard. Under Biden, inflation surged, hitting family budgets and dominating headlines. While job growth continued post-pandemic, rising prices overshadowed gains. Trump's era is framed as prosperity without runaway inflation. Biden's team argues global factors and pandemic fallout drove inflation, not just policy. Still, the contrast, low inflation under Trump, high under Biden, remains a potent political argument. The economic scorecard is fiercely contested. Inflation and interest rates sharply distinguish the Trump and Biden economies. Under Trump, inflation stayed low and stable, allowing the Fed to keep interest rates down. Cheap borrowing fueled home buying and business investment, driving growth. The result: economic calm and predictability. Under Biden, inflation spiked, forcing rapid interest rate hikes. Higher borrowing costs squeezed families and slowed the housing market. Businesses faced pricier loans, threatening job growth. The Trump era is remembered for easy money. The Biden era for fighting inflation. This contrast shaped the financial reality for millions. The Trump economy debate reveals how politics shapes our view of reality. One side saw an unprecedented boom, jobs, stocks, and wages all up. The other saw instability, risk, and a fragile foundation. Each narrative had its own data and experts. In a polarized nation, even economic facts became partisan weapons. Americans' perceptions were shaped as much by politics as by paychecks. The same events led to opposite conclusions, success or peril depending on your lens. The story of the Trump economy is a lesson in the power of political polarization.